I wanted to get back on one of my favorite topics, which is about fees and the fees you're paying, especially around investment management. And it's really important that you understand the costs for things that you are purchasing. And so when we talk about portfolios and mutual funds, that the costs are the fees associated with that. And there's two ends of the spectrum that I want to talk about today. And this was brought up by an article by Jason Zweig, one of my favorite authors, who was talking about fees of mutual funds. And the first is that you definitely have to know the fees that you're paying. So if you are currently sort of unaware of how much your investment advisor is taking, or the brokerage house trading costs, or especially the mutual fund ETF annual fees, if you're kind of fuzzy on that, you definitely want to get on top of that. It is really important to know those fees. It's the number one driver of the return, is the fees that you are paying. It's something that you can control. Lots of other things about public stock markets are totally out of your control, but you can control what it is that you're purchasing, how much those things cost. You have the decision, the purchasing power. Just like when you go to a store, you can decide whether to get A or B based on the cost and the value to you. So if you're not currently aware of the cost, definitely start looking into those things. On the flip side, the article was more about how low these fees are getting. So you can buy, as you probably know, the S&P 500 index for just pennies on $1,000. I mean, it was really cheap to own that index fund, and that is fantastic. So we're now seeing things go from 0.1%, all the way down to 0.01% or even free. There are some funds out there that you can get into and they cost you nothing. Each year you have $10,000 invested. They don't charge you a single penny for owning that, and that is great. Now, traditionally, over the last 20 years or so, those fees were pretty high. We're talking 1%, and there's still lots and lots and lots of funds out there that charge you 1%. Okay, so on $1,000, we're talking $10. All right, so on $100,000, that's $1,000 a year. So your $100,000 investment is $1,000 a year. There's lots of funds out there that still charge that amount. Now let's think about that. If you're expecting that fund to get 5, 6, 7% return each year, take 1% off of that. That's a really big deal, okay? So if you're expecting it to get 8%, now your return is 7%. And if you compound that over many years, that really, really adds up. So you definitely want to be aware of that. But now when we're getting down to 0.1%, many of these funds, index funds, are 0.1% or all the way to free. That's still a tenfold increase, right? 0.1 down to 0.01 is a tenfold increase in the amount you get to save. But the dollars now aren't nearly so much. So out of that $100,000 investment, instead of $100, we're talking $10. And that's still a big deal. That's $90 more in your pocket, which is fantastic. But on a $100,000 investment, it's just not that much. And the other way to think about it is the return. So if you were getting 7%, you could switch from a fund from 0.1% all the way down to 0.01%. Instead of getting 7%, you get 6.9 or 6.99. It's just not that different. So now I think that once you get to those really low fees, you're pretty good. I mean, I wouldn't, penny wise and pound foolish, all right? Get the right asset classes, get low fees, somewhere around that 0.1%, 10 basis points, and you're good. You don't have to finagle like, oh, is this one, 0.05, 0.1, 0.03. It's really not that critical at that point, in my opinion. So, two things from this video. First, if you don't know your fees, definitely get on top of that and understand what you are paying for the value that you're receiving. But once you get to those low fees, now I wouldn't sweat so much of these small details. There's other things that are way more important factors. So there you have it. Hope that made some sense to you on fees that you're paying for your investments. Have a great rest of your week.